Hey everyone, welcome back to the channel. Today, I want to break down something I've been thinking about a lot, and that's the two-sided story of the crypto market right now. On one hand, we've got serious institutional adoption rolling in. On the other, innovation and speculation, kind of dead. But I think that's about to change, and I'll explain why. So let's start with the basics. There are really two major narratives unfolding in crypto today. Narrative 1, institutional movement into Bitcoin. That's legit. You see the ETF inflows, the talk on Wall Street, BlackRock, Fidelity. This isn't retail hype. It's deep pocket conviction. There's a strong bid underneath this market that's acting like a pressure cooker. It hasn't fully released, but when it does, it could break hard to the upside. I still think a short squeeze is coming this year. The innovation side, Ethereum, Solana, Sui, all of them are still very quiet. And that's not because there's no development. In fact, stablecoins are booming, Circle is making noise, and there's real product momentum. But we're missing one thing. If you chart Ethereum, Solana, or Sui relative to Bitcoin, you'll see it's been a straight line down. These assets are lagging just like innovation stocks have lagged small caps in the TradFi world. If you're familiar with ETFs, it's like comparing QQQ to IWM. I'm tracking 3 names daily: Ethereum, Solana, and Sui. Not because they're hyped right now, but because they're where the innovation is likely to return first. Let's talk Ethereum. I've said this before, and I'll say it again. Once ETH gets above 2,650 to 2,700, I think the game changes. That level is resistance, but it's also psychological. Break above that, and suddenly people start believing again. That's when speculation can return. That's when liquidity starts chasing beta instead of just hugging Bitcoin. Solana, same story, trading sideways, holding support, but waiting for the spark. And Sui, quiet, but with solid fundamentals. While speculation's been quiet, real building hasn't stopped. Take Circle, for example. You saw how that traded in private markets. People wanted exposure. That's a signal. Stablecoins are driving the next layer of crypto's infrastructure, especially in payment rails, tokenized assets, and cross-border liquidity. This stuff doesn't get retail hyped, but it builds the base. And when the retail crowd does come back, the foundation will be way stronger than before. Here's my core thesis: beta is about to return. That means innovation, altcoins, and riskier names will start outperforming again. We've seen this story in traditional finance. First, the safe money moves. Then comes the rotation into growth and risk. Same thing is setting up in crypto. Once ETH breaks that $2,700 mark, I think we get a rotation from Bitcoin dominance to a broadening out of the market. And if you're not paying attention, you're going to miss the move. So, what should you do now? Watch the key levels. ETH above $2,700 is critical. Same for SOL reclaiming $180 plus. Keep your eye on the narratives. Stablecoins, real-world assets, and yes, meme coin mania if it comes back. Be ready. The quiet right now isn't death, it's coiling energy. And when it moves, you want to be positioned before the crowd.
To people that understand the crypto space extremely well, one macro person in particular, and I said, I think stablecoins the most important investment theme for next year. And he was like, how do you make money off stablecoins? And I'm like, stablecoins are the bridge between the two worlds. It's gonna bring confidence in people that this is the place that I have to invest in, and it'll lead to stuff in the altcoins, it'll lead to Bitcoin, everything. We need the ecosystem to grow with wealthy people. The only types of people that I've seen, I see and I'll leave you out of this at this point on one side. You've been in long enough. So the OGs that have been involved from a very early stage, and then the TradFi people that made the bet to get involved. But to get wealthy people that are wealthy from the fiat world at this stage and then have them come in, it's very challenging. It's very hard for them to say, I want to be involved. And if they get involved, they want to move into the ecosystem. What Circle has done.
Stablecoins don't have the flash of Bitcoin or the hype of altcoins, but they are the bridge between two worlds, the traditional fiat system and the decentralized crypto ecosystem. Think of them as the gateway, the on-ramp for wealthy investors from TradFi who want exposure to crypto without the volatility risk. It's confidence, it's stability, it's trust. If you're someone from the traditional financial world, the idea of putting millions or billions into volatile assets? That's scary. But stablecoins offer a familiar and safe place to park value while you figure out the rest of the market. This is the part a lot of people miss. Stablecoins don't just hold value, they enable liquidity, lending, payments, and cross-border transfers. This means faster, cheaper transactions than banks, instant access to crypto markets without selling fiat, easier movement of capital globally. And that's what's building trust. What Circle and other players are doing is not just creating a digital dollar, it's creating a financial infrastructure that wealthy and institutional investors can actually use without headaches. Here's the reality. Most of the wealthy folks from the traditional world want in. They see the upside. But it's hard for them to jump straight into Bitcoin or altcoins because of volatility, regulatory uncertainty, and unfamiliar technology. That's why stablecoins are so important. They create a safe harbor, a way to enter the ecosystem, get comfortable, and start participating in the broader crypto world. From what I've seen, there are really two groups succeeding in this space. The OGs who have been here since day one. The TradFi crowd who made a calculated bet to get involved early. But the real growth comes when wealthy new money starts moving into stablecoins, and then flows into Bitcoin and altcoins from there. So here's the bottom line. If you want to understand where real money will come from in crypto next year, start with stablecoins. They're the key to bringing wealth from the traditional world into the new digital economy. And that's why I'm watching this space closely.
When you revise Jobs a year reverse, and what he's saying is that what equates to every year in innovation of AI is about 10 years of the past. You have to really think about that's just a staggering number. That's how fast everything is changing on the AI side. So there's no way that GDP, a statistic created in the 1930s, can possibly comprehend what happens with the intangible side of the economy.
You know, it's fascinating. Once you start connecting a lot of these emerging technologies, something happens. Bitcoin is an accelerator. Stablecoins are an accelerator. AI is an accelerator. Humanoid robots? Same thing. But when you stack these technologies on top of each other, it's not 1 + 1 + 1. It's more like multiplying. Times 5, times 10, times 20. The impact compounds, and what that creates is a kind of break in the timeline, a bifurcation. There's an old world, and there's a new one. I don't know where exactly you'd place that dividing line, but over the last decade, we've clearly moved from the early internet era, think websites and emails, to a world of massive platforms like Facebook, X, formerly Twitter, and decentralized technologies like cryptocurrency. Then AI exploded. Now we're seeing the emergence of general-purpose humanoid robots. It's like we're living in a new economic and technological universe. But here's the big question. How much of the legacy financial system even understands this new world? I'm not talking about investing in it yet, just understanding it. Here's where it gets really interesting. There was a story this week that I think is huge. Economists, Not tech VCs, not crypto Twitter, not zero-hedge mainstream economists are now openly questioning whether U.S. inflation data is accurate. And one of the reasons, the government literally doesn't have enough people using their old-school, outdated methods to calculate it properly. That's kind of staggering when you think about it. It brings to mind something from the All In podcast. They asked Secretary Becerra if he believed the economic data, and his first word was no. He walked it back, tried to give a more polished answer, but that initial instinct? That was telling. What do you think about stablecoins as an investment theme? Are you bullish? Let's discuss.